Your financial life tells a story. Every time you borrow money, credit card, car loan, mortgage, you add a new chapter. Specialized companies known as credit reporting agencies or credit bureaus are the official biographers of this story. Their primary job is to collect and maintain this financial information about consumers. They compile all the data they receive into a detailed document called a credit report. This report serves as a comprehensive history of your borrowing and repayment habits, painting a picture for potential lenders of how you manage your financial responsibilities. The whole system exists to help lenders make smarter, faster decisions. Before these agencies, getting a loan was a much slower process, often relying on personal relationships with a local banker. Now, a lender can quickly pull your credit report to assess the risk of lending you money. The three major credit bureaus that dominate this landscape in the United States are Equifax, Experian, TransUnion. While they all perform the same basic function, it's important to remember they are separate, competing companies. This means the information one bureau has might not be identical to the information held by the others. Credit bureaus gather a wide array of data to build your comprehensive credit profile. This information is voluntarily supplied to them by the companies you do business with, often referred to as data furnishers. The core of your report is identifying information. This includes your full name, any known aliases or variations of your name, your current and previous addresses, your social security number, and your date of birth. This personal data acts as the foundation, helping to ensure that the financial information being reported is correctly matched to you and not someone else with a similar name. The next layer of information involves your credit accounts, credit cards, retail store cards, auto loans, mortgages, and other lines of credit. For each account, the report will typically show the name of the creditor, the account number, the date you opened the account, your credit limit or the original loan amount, the current balance, and your payment history. Public records are another category of data that can appear on your credit report. It can include details about bankruptcies, which can remain on your report for 7 to 10 years depending on the type. Other public records like civil judgments and tax liens used to be reported but have largely been removed from credit reports in recent years due to verification issues. Finally, your credit report contains a section on inquiries. The information on your credit report is not updated in real time. Instead, credit bureaus rely on a cyclical reporting schedule from lenders and other data furnishers. Most creditors compile their customer data once a month: credit card company, auto lender. This typically happens around the end of your billing cycle, which is the period that your monthly statement covers. So if your credit card statement closes on the 15th of the month, your issuer will likely send the updated balance and payment information soon after that date. Once a bureau like Equifax receives this new batch of data from a lender, once a bureau like Experian receives this new batch of data from a lender, it has to process and add it to your file. This step can take a few days to a couple of weeks. This means there is a natural lag time between when you make a payment or run up a balance, and when that activity actually appears on your credit report. For example, if you pay off a credit card balance in full on August 5th but the statement doesn't close until August 20th, the creditor might not report that zero balance until late August or even early September. Because of this reporting cycle, your credit report is more like a monthly snapshot than a live video feed. It reflects your financial standing as of a particular point in time each month. This is also why one bureau might show an updated balance before another. Lenders may not send their data to all three bureaus on the exact same day, and the bureaus themselves may have different processing speeds. Understanding the credit reporting timeline is incredibly important for anyone planning a major financial move. If you are preparing to apply for a mortgage or a car loan, your actions in the months leading up to your application can have a significant impact. Lenders will pull your credit report to make their decision, and they will see the information that was most recently reported. If you paid down a large credit card balance to improve your credit utilization ratio, allow enough time for that new, lower balance to be reported by your creditor and updated by the bureaus. This lag time can work for you or against you. Let's say you are trying to qualify for the best possible interest rate on a home loan. You wisely decide to pay off all your credit card balances. If you make those payments just a few days before you apply for the mortgage, the lender's credit check will likely still show the old high balances. The bureaus simply haven't received the new data yet. To avoid this, it's best to make these strategic payments at least one full billing cycle or 2 full billing cycles before your loan application to ensure the positive changes are reflected. The timing also matters when you're trying to build or rebuild your credit history. Making consistent on-time payments is the single most important factor for a healthy credit score. Every on-time payment you make is a positive data point. Given that your credit report is assembled from data provided by many different companies and processed by 3 separate bureaus, errors can and do happen. These mistakes can range from minor typos in your personal information to major inaccuracies, like an account that doesn't belong to you, or a payment that is incorrectly marked as late. An error on your credit report can unjustly lower your credit score, potentially costing you money through higher interest rates or causing a loan application to be denied. This is why it is so crucial to check your reports regularly. You are legally entitled to a free copy of your credit report from each of the 3 major bureaus, Equifax, Experian, TransUnion, every single week. The official government-authorized source for these free reports is annualcreditreport.com. Make it a habit to pull your reports and review them carefully. Look for accounts you don't recognize, incorrect balances, credit limits, and any late payments that you know were actually paid on time. Also, double-check all your personal information, like your name, address, and social security number, to ensure it's accurate. If you find what you believe is an error, the Fair Credit Reporting Act, or FCRA, gives you the right to dispute it. If you found this video helpful, please subscribe and like for more content.